I've been reading a lot about PMI, private mortgage insurance.
Yes.
I've heard, positive things, and then people are hesitant about it. What's going on with that now? There's some shifts.
Sure. And what is it, too? Most people have no idea what PMI stands for. So private mortgage insurance, back in the day, years ago, banks would expect borrowers to put down 20% in order to purchase a house. Mortgage insurance through private companies came into play, and it is an opportunity for a borrower to be able to purchase a home with as little as 0 to 3% down, up to 15%. And what in exchange is that they have PMI, or private mortgage insurance, built into their loan program.
Which means?
Which means that essentially the bank is allowing you to buy a house with less money down, but in exchange, they're going to be protected because it's a higher risk for them. So statistically, loans that do default or loans that perform bad are usually those that put less than 20% down. So lenders make you pay private mortgage insurance, which will offset the risk for them. So it is going to be either a higher monthly payment. So there's 3 or 4 types of different mortgage insurance. So when you have 0 to 5% down, the traditional form is a monthly payment that's built into the mortgage that a borrower typically will pay on a conventional mortgage for about 7 to 10 years. If you put down 10% to, let's say, 15%, you have a few different hybrid products, meaning you can have the traditional monthly PMI. You can pay it up front in one lump sum and even finance it into your loan. And you'll usually pay that between 3 and 5 years. How do I drop PMI? When will it drop? How do I get out of it? We want, obviously, the monthly savings. So there's a few different ways. If you're in a conventional mortgage, there's an act where PMI would automatically fall off when your balance is 78% of the value. In an environment like right now, where people may have been in their loan for a few years, they know that houses are appreciating, they usually call me or they call their realtor and they say, hey, listen, can you do me a quick favor and get an idea of what my house is worth? And if we think that it's worth 20%, we may offer them an opportunity to refinance in order to use the newest value to get rid of PMI. And a lot of people, too, are first-time home buyers. They're in government loans, which are called FHA mortgages. And that PMI, if you're not putting down 10%, stays on the loan for the entire lifetime. And, that sounds worse than it is, because traditionally, if you look, most people stay in their first loan for about 3 to 5 years. So we're going to refinance out of it anyway. There's not usually an opportunity where someone's in the same mortgage from start to finish, nor do they own houses for 30
But if you
years.
refinance 3 to 5 years in, do you have to pay off the private mortgage insurance?
If you have equity, it will automatically go away. You don't have to renew. If you have less than 20%, you have to enter into a loan with a new type of mortgage insurance plan. And those rates for mortgage insurance is comparable to how well the credit is, how high is it, how much equity you have. So there's a number of factors that determine the rate people pay.